It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Hey, welcome back to another episode. Here we go again, back into another weekend of talking your property news and information. 7 days a week we do that, as heard on iHeartRadio, Spotify, Apple Podcasts and Amazon. Another busy weekend lined up across Australia. Saturday, October the 26th today, and we talk about this housing affordability being absolutely in a crisis. It is worst in New South Wales, Tasmania and Victoria at the moment. That coming from the PropTrack Housing Affordability Index. In Sydney, where the median house price swilling around that 1.5 million, only 12% of homes are affordable for a median income household. And Tasmania, in fact, ranks second least affordable, with less than 1 in 10 homes within reach of average buyers. Despite lower prices, affordability remains a challenge, of course, in Victoria. Western Australia, however, does offer the most affordable housing, attracting buyers and contributing to rapid price growth. And don't forget, you can join in on the conversation. You can do that anytime. Our email address is myrealestatepodcast@gmail.com. So let's get to talking this morning about saving for a deposit, which is one of the most critical yet challenging steps in buying a home. For the average Australian income earner, it typically takes about 5.5 years to save 20% of their income for a 20% deposit. And we just talked a couple of days ago, Western Australia is at the smallest amount of saving time at 3.8 years to save for a deposit, and New South Wales, not really that surprising, 6.5 years. So to discuss all of that, let's welcome back Anthony Landau. He is the Managing Director and Mortgage Broker at Equilibria Finance. And good morning to you, Anthony. Yeah, those numbers, they do vary a little bit from state to state, and saving for a deposit, such a huge challenge, especially when you compare it to 20 years ago.
Yeah, good morning, Craig. Nice to be here again, mate. And yeah, those numbers are pretty compelling. I mean, as you noted, Sydney, 6.5 years on average to save for a deposit, almost double what it is in Perth. And that just reflects the affordability challenge in Sydney, particularly for first home buyers, but also for people trying to upgrade, particularly if they're looking at upgrading from a unit to, say, a house, where it's quite a big step. Main reason is essentially the dwelling prices have tripled over the last 20 years and wages have not quite doubled. So essentially what we're earning is not nearly keeping up with the incredible growth we've seen in the housing market over the last 20 years. That's making the complexity and the challenge of saving for a deposit to get into the market more and more difficult, where people's salaries just aren't going quite as far as they used to, with a lot of cost of living challenges and the sheer growth in the value of the Australian housing market.
Yeah, no doubt about it. The wage growth not keeping up with the pace of just the way the housing market has evolved over the last 20 years. Absolutely a critical piece to the pie, the puzzle, why it is so bad. Of course, buyers look at different options, don't they, when it comes to a low deposit. So what do you think some of those options might be, particularly as we project towards 2025, which is fast approaching?
Yeah, look, it's a really good question, because we get a lot of clients who might be on a two-income family with a couple of children, looking at either getting into the market or upgrading in the market, and they just don't have a big enough deposit. Their serviceability might be reasonably strong. They just can't get the savings behind them. So there are some options. For first home buyers, there's quite a bit of government support. We've got the federal government First Home Loan Deposit Scheme, which is essentially the federal government enabling first home buyers to get into the property market with as little as a 5% deposit, which is fantastic. Generally, people with a low deposit loan have to pay what's called lender's mortgage insurance. So if they've got less than 20%, they'll be paying an insurance premium, which only adds to the challenges of getting into the market. There are some providers that will offer up to 85% without lender's mortgage insurance. There are some providers, in fact, who go up to a 95% loan. However, you will pay lender's mortgage insurance. But if your serviceability is strong, then it might be that you're willing to pay the $20,000, $30,000, $40,000 that's capitalised into the loan to get into the market with a lower deposit and then back yourself to pay off that loan if your serviceability is strong.
So since we're sort of projecting towards 2025, you've no doubt had these conversations with your clients that are saying, okay, Anthony, how many of these rate cuts do you think are going to happen in 2025? They're sort of working and strategizing for those rate cuts. And the jigsaw on the table, it's constantly being shifted around, trying to maximize their full potential with those rate cuts, I guess.
Yeah, it's a tricky market. Spring nationally, we're seeing a little bit of a drop in dwelling values. So what we're seeing is we're seeing a lot more stock, which we traditionally do, but we're not seeing the buyers there. And part of the reason I bring that up is because I think some people are sitting on their hands waiting for these rate cuts for a couple of reasons. Firstly, they'll be able to borrow more. Their serviceability will be stronger as the rates come down. So what I mean by that is the way the banks assess how much people can borrow is directly related to the interest rate plus a 3% buffer. Secondly, I think people are going, let's wait for 25, 50 basis points rate cut, which as you're suggesting, and there's a lot of commentary, seems to be making sense, will happen at some time next calendar year. I'm probably of the view it might be later in the year we get that relief, but either way, inflation is slowly heading in that direction. So people are then going, well, look, once those rates come down, our repayments are going to be more manageable. So we're doing a lot of work with clients looking at what happens if rates go down 25 basis points, 50 basis points. What does that mean our repayments will be? So it's going to affect how much people can borrow, and people are also really looking at what are my repayments going to be if we get a bit of rate relief? And that's why I think demand's been down a little bit in spring.
All right, we are talking all about mortgages this morning on our Saturday. We'll come back. More of Anthony Landau after this.
Unlock the secrets of real estate and stay informed about the latest real estate buzz with hot market trends, emerging suburbs, and hidden gems.
And right now it is time for another 30-second property tip, and we are going to Pat once again on the South Coast in New South Wales. Good morning, Pat. What have you got for us this morning?
Good morning, Craig. In a market that's somewhat slower, sometimes people don't consider auctions, and they should, because it's a perfect market for putting a time frame around a sale when people aren't feeling urgency, and also not capping the price a buyer will pay for the property. And we've got an excellent auctioneer, and her strategy may surprise people. We often set the reserve higher than the vendor's expecting, so that if it stalls, we've still got some negotiation that we can do, and we found that very successful.
Each week, we bring you in-depth real estate discussions, including inspiring stories from homeowners, knowledgeable real estate professionals and economists. Whether you're a buyer, seller, or just a real estate enthusiast, we are your ultimate property podcast.
And it is a Real Estate Saturday. Hope you've got something organised to do across this coming weekend, and plenty of property, transacting, looking at property, talking about property, strategising, as we just mentioned before the break. And Anthony, you're talking about those rate cuts and just how many we're going to get into 2025. Then we've got the election, of course. Boy, this is getting super close. Where are we? I think we're down to about 10 days, 9 or 10 days. If Trump gets in, then anything could happen, because it's a real global election event this cycle.
Yeah, it does feel like an election that is going to have broader implications and impact around the world. So, and it sounds like it's getting very tight. And as you say, it's within the next 2 weeks. I think next time we talk, we will know who the next president of the United States going to be. So, some interesting times ahead on that front, separate to the Sydney spring market.
I just cannot imagine what is going to happen if Trump gets in. It's going to be just hold on for this. This is going to get real crazy.
Yeah, well, look, I think there's a lot of pros and cons on both sides. Obviously, the Western world's looking for strong leadership at the moment, and each party's trying to present their case. Yeah, it'll be very interesting to see what happens.
So you talked about those options for buyers with a low deposit. What about the flip side and the circumstances that you see where buyers need more of a deposit?
Yeah, there are situations where buyers might need a 30% or a 40% deposit. That's often tied into a couple of factors. Firstly, the type of security. For example, a very small unit might not be deemed as strong as a security by the provider, so they might want to have a 30% deposit in that sort of case. Sometimes if someone's age is over a certain amount, and providers have different policy around that, they might want to have a 30 or 40% deposit to give them that extra comfort. And there are some occasions where there's some specific policies, for example, for self-employed, if you haven't had an ABN for a certain amount of time, where the providers might be happy to fund a loan. However, they might want to see a larger deposit. So, yeah, whilst the deposit is a really, really big challenge for home buyers, there are actually some situations, security, age, employment type, where providers might actually want to have a bigger deposit.
And how busy are you at the moment? As I say, we're into the 26th day of October, not a lot left in this month. You'd be looking forward to a break come the end of the year, wouldn't you?
Yeah, well, there was a bit of a lull in winter. From a broking and a credit flow perspective, there was a real refinance flux while those rates were going up. People were fixing. A lot of people were trying to move around. There were refinance rebates. We came into 2024 and there was a bit of a downturn in the market, I guess, through winter. There was obviously the inflationary and the cost of living pressures, but look, spring always does bring an uplift. The main activity we're seeing is through home buyers and investors. Investor credit flows are almost 40% of total credit flows at the moment. From our perspective, our brokerage, we've had one of the strongest lodgement months we've had for a while, which is indicative of people are out there getting an approval in place, deeming that the market has some opportunities at the moment, because we are seeing a bit of a slowing across Sydney, Melbourne, Brisbane, Perth, all of the major capitals. Stock on market is longer, so the buyers have more time to negotiate and maybe secure a better deal. So a lot of buyer activity, albeit it is a little bit slower, as I touched on before, than traditionally, but there's plenty on. And yeah, we are looking forward to getting to the end of the year, no doubt about that.
All right, Anthony Landau, you enjoy your weekend. Thanks for coming back onto the Real Estate Breakfast this morning, and talk again soon.
No worries at all, Craig. Great to be here, and enjoy your weekends.
We don't just report on real estate news, we take you to the source of the information. We produce more property podcasts every week than anyone else. We are your trusted guide for all things real estate.
I think the increase in first home buyers, definitely under that $1 million mark, is where we're starting to see majority of buyers enter the market, especially if it's close to that 700,000 to 800,000.
Now, just in the last week or so, we've done podcasts in the likes of Rockhampton, also Darwin, talking about their median house price, and they're talking about interstaters moving from the likes of Melbourne. Are you sort of seeing that firsthand, people moving out of the area?
To be honest, after lockdowns, I think the majority moved out to the state, to Queensland. A lot of them moved to Perth, a lot of them moved to Adelaide. We're still seeing that now. Funnily enough, I've recently started to see a lot of people move from New Zealand to Australia now, just because it's getting a little bit too expensive now. We're seeing a shift out, but we're also seeing a shift in from certain directions.
We connect you to the best real estate information across Australia. The Real Estate Podcast.